Hi there. I hope you're having a great day. Welcome to the River of Wealth, where we are talking about generating income with multiple income streams like stocks and options. Today, I'm going to be teaching you one of my favorite methods of generating income with options, which is the bull put spread. Today is a very big day in the stock market. NVIDIA is reporting earnings after the bell. And so that's going to be a very big deal. And so I'm going to show you one hypothetical strategy to play this with options using a bull put spread. What's a bull put spread? You're basically selling one option that's out of the money at a strike price that you're happy buying it at, and then you're buying a put at a lower price beneath that, which is capping your downside. So I'm going to show you how to do that with NVIDIA. So let's get after it. So right now, NVIDIA is at 185. And so let's go to the options chain. These are all the options here. And so you can do this on different time frames. Typically what I like to do is the 30 to 45 day time frame. If you're making a real specific play just for the options, you can do it at a shorter one, but I like giving it a little bit more time than that. So let's do this at the 30 days till expiration. And so typically I like to sell a leg at around the 20 delta. So right now that's showing at 164. So right now NVIDIA is at 185, and so potentially we'd be selling it at 164. Now, just to show you, a lot of the time I like to maybe move the fives and the tens, and what I mean by that is like look at the difference in open interest between the 164 and the 165. There's 7,600, and here's 32,000. So sometimes I like to do that because it's a little bit easier to get in and out of it. You can see here, there's a 5-point spread here and a 10-point spread here. NVIDIA has pretty good liquidity, so it's not too bad, but in general, it's good to look like that. And then the other side of the spread is I usually like to buy around like the 10 delta. So that's showing that at like 152 or so. And you can kind of, again, you can kind of be fuzzy with that. Like a lot of the time you may want to have like a spread of, maybe 10 strikes between them. So if we're going to do 165, 155 between 10 points between those strikes, let's set that up and see what that trade looks like. So to do that, to set up a spread, you go over here in Thinkorswim and you click vertical, and this will allow you to do that. And so set this up. We click there, and I'll go back to single here just so we can still see the chain. And so again, we're talking about, I'll probably sell, let's sell the 165s. So, and then we are going to buy the 155s. So let's look at just what one contract of that looks like. Let's analyze it. Again, let's see here. This is the only one that's on. All right. So for one contract, we would be getting $177, and our total risk is $823, and that would basically be realized if NVIDIA went all the way to 155, and we basically get our full amount as long as it stays above 165. You can see here, here's the break even. So break even is at 163. Now let's pull up the chart and see like what's going on with NVIDIA. I mean, you can see here, like that's a pretty big jump. And that's because earnings are tomorrow. And so you can see the implied volatility here. Here's the implied volatility column. That's a little bit higher than normal. Like you see, like again, like the 165 strike, 56% implied volatility. That's a little bit higher. And so what you'll see is tomorrow after earnings, typically you'll see that implied volatility drop off a lot. And so there'll be like, they actually call that a volatility crush right after earnings. So let's if we like this trade, let's put it through. So basically we hit confirm and send. Let's do this. You can see here, just setting it up, the midpoint between these is like 1.79 and natural is 1.75. So basically if you want to get this filled immediately, you'd be getting $174. the midpoint, and that's like looking at, again, 165, the spread here, and then the spread here, 155. The midpoint, and you see it's always changing. It's like 176 now. So anyways, let's put that through right now and get 171 for it. Bam. And that just went through. And so you'll see $174 lands in our account. Now to close this out, the way to do this, a lot of the time I like to close this out at a 50% profit. So let's do that for NVIDIA here. So to do that for this trade, again, we can see what it went through at. It went through at 1.76. Okay, so $176 we got for this. To close this, we hit shift here to get both of these contracts. And while we're doing that, oops. So while you're highlighting both the contracts and you're holding shift, then this allows you to create closing order. And so you can do that for both legs. So now this is going to be buying the 165 and then selling the 155. And that basically closes this and gets you back to even. And so what did we say that this went through at? This went through at 176. So a 50% profit on that. 1.76 times 0.5. I was really good at this in elementary school. 1.76 times 0.5. But somehow I lost it. 0.88. 0.88. So 0.88. That's what we'll close this at. And then we want to do a limit order. And we'll do this good till canceled. And that makes it so it'll stay there, until it actually goes through. And that's what we always want to do for a closing order like this. And again, we always want to do a limit for these, and that makes sure it only goes through at that number. Confirm and send. Send. And then now you can see that here in the working orders. In the monitor tab, go to working orders, and you'll see it's waiting there. So right now, the mark, which is the medium point between the bid and the ask, is 1.79. And so as soon as that hits 0.88, it's going to be looking to fill any order it can at 0.88, and then it'll close this order out. And then and then you make money. And so and then obviously you can make this bigger. So this is for $177. You could, and that's for one contract. You could do 10 contracts and get $1,770. And et cetera, et cetera. So you'll see, the bull put spread is a great way, especially in accounts that are not using margin, in a little bit smaller, that you can generate a great amount of income. The thing that's also great about it is that all you need in the account is to cover your potential losses. So you get to have a limited downside for it. So anyways, I hope you found this useful, and it'll be interesting to see how this play does with NVIDIA earnings tomorrow. And if you ever have questions, you can always ask me or ask inside my community, the River of Wealth, and I'm happy to help you out. Hope you have a beautiful day.